everybody, and welcome to Betweenplays. Today, we have Chase, CEO of EverGen. How are you doing today, Chase?
I'm doing well. Thanks for having me on.
All right. And of course, we have Alain the Bid with us for Venture Markets segment. How are you doing, Alain?
Very good. How's everybody today?
I think that everybody's doing well, especially if they're following us. So, what I got to say over here is, Chase, I've been looking a little bit at your company. I've been just, looking at, your shares outstanding and stuff like that. It seems like you have a really interesting project, and I'd like to be able to share a little bit of your background and, share some background on your company and what you're doing in your space.
Yeah, sure. Thanks, Albert. We're a renewable energy company, and we make our energy from organic waste. So EverGen is an infrastructure platform, and we've got projects across Canada, but our bread and butter is taking organic waste, whether it's green bin waste or household organics that get picked up by the municipalities, commercial food waste, pre or post consumer, and agricultural waste. And we take all of that and we accelerate decomposition. We get all of the methane that traditionally would have gone into the atmosphere had that waste decomposed in a landfill or otherwise. And we take that gas and we put it into the pipeline network, and it gets used by utilities across Canada as a green source of energy.
That looks actually really interesting. I mean, it's pretty much where we're going in the future.
Yeah, I think what's really interesting about this space and a little bit about the genesis of EverGen is there are a number of similar platforms that exist in the wind and solar space. You look at the big Canadian IPPs like Northland Power or Intergex, and these companies have been doing this for 10 years, supplying green energy to the electrical grid. What's missing, or what has been missing, is a fuel source that's green that can go into the existing gas grid, which is one of the largest energy storage networks we have across North America, and allows us to provide heat on cold days, across the continent. So I think that infrastructure is so important to our energy transition, and finding fuels that can go into it, drop-in substitutes, is really the key. And that's what attracted us when we founded EverGen. So what we saw was this massive opportunity to supply green energy into the gas grid. Myself, our president Misha Zatman, and our chairman Ford Nicholson had all worked together on various different projects in the resources space and the energy space. And what we saw here was an opportunity to make a difference, but also to do it in a way that is low risk, and that risk is really offset by the contracts that we can get for our gas. So what really attracted us, in addition to all of the things that we just mentioned, was the fact that you could get a 20-year fixed price agreement from a Canadian utility to sell the gas. So that really underpins the investment that we make in projects. It de-risks it by giving us annual reoccurring cash flow that it's essentially coming from a A-rated Canadian utility that's going to be there through thick and thin. So really a de-risked model.
Wow. Okay. So it sounds like to me that you've positioned yourselves for the future. So with that in mind, I'd just like to be able to take like 2 seconds. If you have anything in the pipeline or anything that, is there, to give an opportunity to all the viewers out there, what we can bring to the investors, given the fact that you have put yourself into an area of, like you're saying, renewable energy, and that is definitely the future. I mean, we've seen this everywhere. We've seen agreements with the United States and all these kinds of things that will have put us in. We need critical minerals. We need renewable energy. This is highly important. So we know that right now that a company like yours is positioned for the future. What can you tell like the shareholders out there? What can they be looking forward to?
I think it's an exciting year for us. We raised $60 million of equity in 2021 and the end of 2020, ahead of going public or through our go public round. We did a traditional IPO, and we IPO'd with a 650 deal with a half warrant at 1050. Today, we trade at around 260, 270, and we haven't had any dilution since then other than a small acquisition that we did. So really, it's a very clean capital structure. And so, what's changed though since that IPO? The IPO was in August 2021. Is we are now on the cusp of a couple of our projects that we've invested in, increasing their cash flow and coming online with the expansion work that we've done. So our portfolio consists of 4 operating properties in Western Canada and a number of development projects across the country. Those 4 operating projects, we're in the middle of construction on 2 of them. And with that, what we're doing is we're going from a run rate or historical EBITDA of around $3 million, so we're cash flow positive in 2021, into, with these facilities fully expanded, we've got a base case EBITDA out of these assets that we will have bought and paid for of closer to $10 million, $8 million, and with flexibility to increase that without having to spend any additional capital. So that's kind of the base projects under construction right now. So things to look forward to. We just announced a debt facility for $31 million with Roynat, a subsidiary of Scotiabank, and Export Development Canada. So that gives us another $25 million of capital to invest across our portfolio. And we're going to be commissioning our first expansion project that I mentioned.
Yeah.
It'll be flowing gas into the pipeline shortly, and we'll be producing that gas under a contract to Fortis BC. So one of the utilities that I mentioned that's out there buying renewable natural gas, we've got a 20-year offtake agreement with them on that facility. And then the other project, Fraser Valley Biogas, same thing. We've taken a facility that was producing gas. It was the first grid-connected renewable natural gas project in North America producing to a utility. It's been doing that for 10 years. We've invested the capital to double the capacity or the output of that facility. So we take in more organic waste on the front end. We produce more renewable natural gas on the back end. And that project for us is we're targeting completion towards the end of Q1, early Q2. And for us, that's another substantial jump in our cash flow.
No,
And
absolutely.
you just have 14 million shares out, right?
That's right, 14 million shares.
So that's very tightly held, right?
Yeah, we were primarily institutionally held. I think if you look through our disclosure, you'll see that one of our large shareholders sits on our board, and then we have a number of other large institutional shareholders that make up the rest of our shareholder base. We've and I think systematically thought about building out our business, and what's unique, I think, about Infrastructure is that the capital available for projects like ours, if we look at our pipeline, so stepping out of the projects that are under construction and into the future, there's a number of different sources of capital to continue to develop those without having to raise additional equity. You can bring in a large partner to fund that development. There's a number of infrastructure funds that specialize in renewable energy infrastructure, and so there's a broad pool of capital that we would look at to accelerate our growth beyond the initial 4 projects that we have in our core portfolio.
Any analysts following you right now?
Yeah, so we've got research coverage from Desjardins. We've got research coverage from Claris Securities. We've got RBC covers us as well. And we have coverage from PI Financial here in Vancouver, who it's an analyst that covers the renewable space. And traditionally, where we get lumped in with similar companies or analysts tend to cover us and some of the other smaller clean energy infrastructure companies. And then they tend to also have coverage of the large IPPs, the Northlands, Interjexes of the world. So I think from a valuation standpoint, the simple math is if we've got $8 million of EBITDA, you're looking at contracted infrastructure companies like ours that trade in the mid to high teens, and that's many multiples above where we're trading at today. So I think an interesting time where we've got a combination of news flow coming. We've got real projects that are coming online that make a material difference to our cash position, and then we spend a lot of time growing our pipeline. So we've got some really interesting projects. A project in Ontario called Project Radius, which we're working on getting shovel ready, so ready for construction. And to us, that's another material leg of growth.
So if I look at it, you're talking about mid teens. Right now, you're at 3 times EBITDA, right? If you look at 3 times, it's at 37 million. You're talking about 8 million, or maybe 4 or 5 times EBITDA, right? Moving forward.
Yeah, I think that's a fair way to look at it. Once we finished our first 2 projects, we'll have our net debt of around $10 million. So basically, we've got $6 million drawn right now on our debt facility, and we would expect to have a little bit more drawn, but nothing significant. And then we've got a third project, our Net Zero Waste Abbotsford project, which we are working to get shovel ready or ready for construction as well. And that project we've already secured through that EDC and Roynat facility dedicated capital to build that. So we've got $16 million coming towards that facility, and we've applied for around $20 million of grant funding as well, for what is a net $30 million expenditure for us. So if we're successful with all of our grant funding, there's no further equity to go in that project. Otherwise, we would fund that next leg of growth from our balance sheet plus free cash flow, plus as we move forward towards that, we'll have cash as well that we would invest in that. So I think when we look at this space, what's really been exciting is there's been some interesting transactions, companies of similar size that are getting gobbled up by US infrastructure platforms. What that means is it's left less competition for us here in Canada, and we've been continuing to grow successfully with projects in Ontario and Eastern Canada that we're looking at, as well as adding projects in and around our base in BC and Alberta.
All right. And how long does it take that question that could come from people? How long does it take to build and move forward and start flowing on your gas?
Yeah, so what you're looking at typically, if it's a greenfield development, and we've specifically focused on expanding brownfield sites, so we're accelerating the process for a number of reasons. But essentially, what you have to construct is 2 digesters or 3 digesters, depending on the size of the facility. These are 100-foot diameter tanks that essentially have mixers in them to mix the waste, which is a liquid slurry, and heat it up, so you accelerate that decomposition in the gas production. And then you've got what is primarily methane. You've got to remove the CO2 and put that into the pipeline at pipeline spec, which is 98% methane, but it goes directly into the existing grid. So there's limited tie-in costs if you're on a grid system. And that's where we look to locate our projects. So when you look at all of that work that has to be done, some of it is modularized and pre-packaged, but we're basically looking at breaking ground to first gas production is about 6 months. We like to think of the moment that we're in as a nexus for us, where we've got growth coming and coming very quickly. We've got some significant changes to our assets that's going to make them, they're profitable today, and we're sitting on cash, so we're in a relatively comfortable position, but we're moving into a position where we think we can continue to consolidate and roll up this space, this very early stage renewable space in Canada. And I think that that's a really wide open canvas right now. a lot more open than we would have thought 2 years ago. So we're really pleased with the progress that we've made, but the opportunity that still exists in front of us. And round numbers, we look at the amount of infrastructure that needs to get built out just to satisfy the utility in Western Canada that is most active in the space, and that's about $2 billion of infrastructure. We've seen Energy now come out with their own targets, which just adds to that, and we're seeing gas pricing step up at the same time. So we're getting 20-year contracts, and those contracts every year that we wait are getting locked in at higher and higher prices. So that's what's really interesting about this. We're not here to replace traditional energy, but we're a really logical transition fuel that we should, rather than letting waste decompose and generate carbon, I think we should be using that energy that's sitting right there, capturing it and having it as part of the mix.
So the way I see it, Chase, build it and they will come. This is the way I see it's a takeover target in the next few years if you look down the road, because you're just building it right now.
We're the field of Alain's dreams.
Yeah, exactly.
Well, you know what, Chase, thank you so much for being on Betweenplays. We'd really like to be able to have you here in the future. Thank you once again from Betweenplays. We'll see you again, Chase. Thank you so much.
Thank you. Thank you very much for having us.
Hello, everybody, and welcome to Betweenplays Stock Market Strategies. Hit the like and the subscribe button. Head off into our description below if you'd like to know where all of our social media links are, and also the podcast, whether it be Apple or Spotify. We will be doing interviews with CEOs, with analysts, and it's not only on the stock market itself, but also on cryptocurrencies and blockchains. We will have guest speakers. We will be doing panels. You will be able to enjoy a lot of different content. Have a great day, and always remember, research, prepare, plan, execute. Stay strong.